Good afternoon. Welcome to ActivTrades Monday Market Matters webinar for the 5th of January 2026. It's Paul here with you. Firstly, let me just say welcome and a Happy New Year to everybody. I hope you've enjoyed a good festive period wherever you are joining us from in the world. I appreciate that whilst these are the English Desk webinars, we have a truly global audience here who join us at ActivTrades. You're all very welcome. I hope you're all ready and recharged and ready for what will undoubtedly be an interesting 2026 ahead. Today, we're going to focus on looking at trading US markets in 2026. And in particular, for this particular one, we'll focus on intraday US indices, but more of that later. For those of you joining us here for the live session, it would be really appreciate if you could quickly just confirm in the chat box that you can hear my voice and that you can see the slides. Always just want to confirm the technology is working in our favor before we dig into the main thrust of our session today. So what are we going to talk about? Well, of course, it's Monday Market Matters. So we'll start with having a little look at the news in terms of the sort of the economic calendar, the news, the narratives, and the themes that we've had in the since the start of 2026, and it has been a rather eventful few days already, hasn't it? And that will undoubtedly reflect in the markets, which we'll look at later. But today we're going to talk primarily about US markets. Okay, what do they hold for us in 2026? Most importantly, how can we look to engage with them? Okay, how can we look to trade them? What do ActivTrades offer in terms of asset classes and instruments? And as I said, today we'll focus mostly on intraday US indices, and in future sessions, we will look at other elements that are relevant to US markets as well. So hopefully that will help give you just a little bit of insight and help in how to engage with US indices. And as always, I appreciate that we always have a broad range of experience of people who join us for our sessions. Some people at the start of their trading journey, some people very experienced. You're all welcome here. Hopefully there'll be something for everybody to take away. And I hope that I can answer any questions that you may have, which you can put in the chat box. And then, as always, what we'll do is we will switch across to the live markets to have a look at how the US markets are opening up here for the first session of the first full week of 2026. Those of you joining us for the first time, Monday Market Matters is ActivTrade's regular webinar, where invariably every Monday at 2 o'clock London time, we will look to basically take a look at the major news to be aware of for the week ahead. We'll have the main thrust being about education to help you build your trading knowledge. We'll talk a little bit about the ActivTrades platforms and tools that you have available to you as a client, and then I'll look at the live markets at the start of the US session. There is always plenty for us to cover, always plenty for us to discuss. You're very welcome to put your questions into the chat box. If they are within the remit of our session today, I will happily try and help guide you. And the whole aim of our sessions is to help you start the week in the right frame, in the right place, as we prepare for the opening of the US markets, which is at the moment, it's about 24 minutes time. So, as I said, always plenty for us to discuss. So let's crack on. Okay, so we'll start with a quick look at the news that's coming out. If you are at the start of your trading journey, I say this every week, I would not expect you to necessarily be able to analyze the economic data that comes out, but it is very important for you to know when that economic data is being released, certainly the formal economic data, because the likelihood is that certainly the sort of high impact economic data will induce volatility into the markets, and volatility is very much a double-edged sword. When you're on the right side of volatility, well, it can make for a great trading session. When you're on the wrong side of it, it can make for a challenging trading session. So it is in your best interest to understand when the formal economic data is being released. And you can find that out on an economic calendar. There is an economic calendar on the ActivTrades website and also elsewhere across the internet. So no excuse not to be able to sort of just know when that major economic data is being released. Today, okay, what we have, in about what's that? In about sort of 15 minutes time, we'll actually have, as you can see, we'll have US manufacturing PMI data. I very often say that if you're at the start of your journey and starting to learn to analyze economic data, PMI data, the Purchasing Managers Index data, is a useful starting place, mainly because it's pretty simple to analyze because it's all based around the number 50. Namely, if the number comes in above 50, well, that part of the economy is in expansion, and if the number is below 50, that part of the economy is in contraction. So you get a very quick snapshot of that economy. And of course, once you're able to reference that to previous readings, you can get a take on the sort of, let's say, the trajectory or the direction of travel of the overall economy. So for the US, we have at 3 o'clock London time, we have manufacturing PMI data today. And then on Wednesday, we will have the services element, the ISM services PMI data there. Tomorrow is a pretty quiet data in terms of high impact news. And then Wednesday, we start off with some Australian, their inflation numbers, okay, that come out overnight for those of us here in the UK and Western Europe. And then we get into the theme of, we are into the first full week of the year, and invariably that will mean the sort of US jobs data and gives us some insight into the state of the US economy. My personal view, is that, this data this week will be much more sort of keenly watched and felt than perhaps before, because of course, really we sort of got out of the sort of the routine and the schedule over the last sort of quarter of the year of getting on top of some of the former US economic data because of the US government lockdown. So many people will be looking at this data here this week as a hope that we can return to a sort of standard routine and schedule, and very give us some insight into the health and state of the US economy. And that starts with, we have on Wednesday in the afternoon, okay, we have ADP non-farm employment numbers. ADP is they're a kind of private payroll company. So it gives us an insight into, the sort of private jobs numbers. And that means it can be a little bit more volatile than the non-farm payrolls on Friday, but it is still a useful indicator. There's also the JOLTS job openings. They will be coming out on Wednesday. On Thursday, along with Swiss inflation numbers in the morning, we've got US unemployment claims. Friday, then, is the day of employment numbers both in Canada, but then also the non-farm payroll numbers, the average hourly earnings and unemployment rate for the US that comes out for us here in the UK and the Western Europe in the afternoon. And there is also the University of Michigan consumer sentiment and inflation expectation numbers. So it's a heavy US dollar week, all right, which adds to, let's say, let's add to the sort of sentiment after the events of this weekend, where we saw President Trump and the US military sort of have an incursion into Venezuela. Undoubtedly, markets will be processing that information, and they will also be looking for reactions, okay, not just purely from US markets, but also from other entities and countries around the world. So it adds another layer of interest onto what will already be an interesting week. Furthermore, we also have, it's the first full week of the year. There's always, lots of people interested in seeing, how do the kind of main institutions start to look to position themselves for 2026. And sometimes you can be quite telling in terms of looking at the kind of charts and the price action for the first week of this year, but more on that later. So it is going to be an interesting week. As always, make sure you're on top of the economic data flow, make sure you're on top of your risk management, okay? And because of the world we live in now, make sure you're also on top of sort of social media matters, because of course it is not unknown for Mr. Trump to make proclamations. Maybe that's a little too strong a word, but across social media, which of course can shift markets as well. And that's the world we live in. So talking of President Trump and talking of US markets, let's switch over to sort of our main thrust for today. Now, it would be interesting to know of those of you who are joining us here in the live session this afternoon, how many of you are actively engaged in trading US markets at the moment. Okay, maybe you're an indices trader, maybe like commodities, maybe like a FX, maybe you're a swing trader, maybe an intraday trader, maybe you're a scalper. It would be interesting to know what has been your experience, okay, of trading US markets. I also appreciate that some people who are here at the start of their trading journey and have no experience, and that's absolutely fine. That's what these sessions are here for, to help sort of raise everybody's level of understanding and provide some insight. So by all means, in the chat box, if you have experience, put that in there. It'd be great to hear, and it also helps me sort of understand the kind of the level we're talking about. But excuse me, I'm trying to get rid of my sort of winter cold here, so I apologise if I have to hear me cough and splutter on occasion. I think it's fair to say that 2025 was a fabulous year, okay, of volatility in US markets. And as I said earlier, volatility is a double-edged sword. When you're on the right side of it, it can make for great trading sessions. When you're on the wrong side of it, it can make for challenging sessions. So with that in mind, we want to look at, well, okay, what does 2026 hold for us? My own view is that it's probably likely to be more of the same. Okay, we are likely to have more volatility in markets in both good and bad ways. Invariably, as I said, we've already seen this the first week. We've just had the first weekend of 2026, and President Trump sort of pulled something out of the bag, shall we say? Okay, and that will undoubtedly have impacts across markets. As I said, we'll see that this afternoon session and throughout the next week and month. So, as I said, I think there'll be more of the same, all right? And we also have to remember that we are also, with regards to the US, we will be working towards the US midterm election cycle, okay? So the midterm elections are in November 2026. So it seems a long way away when we're here in kind of January 5th, but I can assure you that A, it will come around quick enough, and B, there will be moves and counter moves as sort of, let's say, political forces try to shape the narrative in the run up to those elections. Mr. Trump, okay, he's going to be keenly aware of any kind of shifts in polling, or we can expect proposal and policy from both sides of the House, and invariably there will be lots of talk about sort of trying to grab control of Congress, and all of that will have an impact in US markets. Okay, but so as I said, it's going to be an interesting year, lots of volatility, lots for us to look at. But today, what we're going to do is we'll focus on US indices, okay, so that we can focus on one asset class per session, and we will look at other ones in future sessions. The reality is that trading US indices, especially on an intraday basis, it is an attractive proposition to many traders due to the volatility and the moves, okay, and also the liquidity. And that can be fascinating to new traders and experienced traders as well. So we will have a little talk about US markets, but then what I'm also going to do is provide a kind of a simple basic introduction to trading US indices on an intraday basis, so that hopefully you're prepared for what awaits if you are at the start of your trading journey. So one of the reasons I decided to look at this, especially at the start of this year, is that just from my own personal experience when it comes to sort of trading overall markets, that there are times of the year when you may choose to focus on one asset class over the others. So maybe parts of the years it might be FX or equities in particular, or indices, fixed income, and other asset classes. Sometimes it is quite clear where the energy lies, shall we say, for want of a better word. Sometimes it's very clear, and other times it is not. I wish I could give you a very clear-cut, simple rule of thumb guide that, for example, Q1 of the year is always, good for commodities, etc. I generally haven't particularly found that, even though I will look at seasonality. Part of it is about having a good overall routine of analysis, so that you are able to watch and understand the shifts in energy and momentum within markets. So certainly, if you were looking for the last couple of weeks of 2025, in fact, you might say the last month or so of 2025, certainly there was a huge amount of energy into commodities, and in particular hard commodities. And even in that, we looked at gold and in particular silver, but also palladium and platinum. They were really the sort of the shining lights, shall we say, okay, as we ran into the final stages of 2025. And as I said, sometimes it's very clear because it's because you can see the news narratives, the sentiment, and also the charts themselves are very clearly telling you, where the market's energy is going. And as I said, sometimes it's clear, other times it's not. But what we'll do, as I said, over this session and future ones is look at the options available to you certainly in terms of US markets, and also in terms of how you can engage with them with the asset classes that are available to you here at ActivTrades. So I thought just to help people who are at the start of their trading journey, we'll just do a couple of slides in terms of just building the picture, shall we say, raising awareness about trading US markets in 2026. And in particular, when we look at US indices, all right, the makeup of particularly US equities, when we look at some of the kind of key drivers that you want to be aware of or start to build into your own analysis, things like monetary policy and Fed expectations. The sort of latter half of 2025, a huge amount of focus was on the work of Mr. Powell, the FOMC, the Federal Reserve, in terms of their interest rate cuts, and that focus will continue certainly for the first 3 to 6 months of this year, as traders and analysts and investors look at what is the likely direction of travel for the US Federal Reserves, okay, in terms of what, if any, more rate cuts will we see? Will there be pauses? Could there even be hikes? Okay, I think that would be unlikely at this moment, but things can change. Okay, things can change, and so you will find traders and investors watching those kind of inflation and jobs data closely. And as I said, this week we've got the start of that this year, and so people will be keenly aware and watching that, see what kind of insight that gives us to the health of the US economy. When you look at particularly equities, they will also be looking, as we move soon into the sort of earnings sessions, okay, in terms of earnings growth. So those corporate profits, they still remain the core drivers of indirection, but any indication of slowing growth, that will tend to weaken indices. And so some people like to particularly sort of focus on trading equities, and then the indices off the back of that. But really, as I said, the major analysts will be looking at, okay, what are we looking at in terms of any particular slowing growth in corporate profits, because that will invariably dent sentiment, dent confidence. That in itself will have an impact upon US indices. We'll also be looking at a possible sort of shifts in the sort of sectors in terms of what's leading those sectors. Certainly over the last couple of years, all right, we've had basically technology and AI stocks. They have led in terms of individual stocks and the sectors. But what we have seen and what we start to see edges of is rotation into value stocks, small caps, and some none of the sort of mega cap names. That could change patterns, okay, and once again, that would be something that traders will be keenly aware of, looking at the trajectory of those kind of tech and AI stocks. Okay, we've had I think it's probably fair to say we've had a couple of wobbles over the last couple of months, and the question is, are they just wobbles, or are they an insight into something that is sort of a more underlying challenge that we might see in 2026? And not unsurprisingly, the macro risk events are impact everybody and everything. Nobody is able to avoid that. Okay, so geopolitical events like what we saw over the weekend in Venezuela, the elections in terms of the US midterm election cycle, and also stress in any of the kind of credit markets, they can also cause additional volatility for us. So, just as a kind of a top tip and a point is that remember that, indices reflect a broad market picture, okay? So that picture being made up of risk appetite, macro news, and those rate expectations. And that can often move them more than any single stock's news. And I even say that in the world we live of, of Nvidia and, those Mag 7s making up a huge portion of those US indices, it is still those indices still reflect a broad market picture, okay, and risk appetite can change quite quickly and quite significantly, and so keeping on top of that, if you're going to trade US indices, becomes increasingly important. But we'll talk about that more in a few slides' time. So with regards to trading US markets as well, let's have a quick chat about, in particular, the US dollar for FX markets. It's where I do an awful lot of my own work. Okay, that's where I started. And in terms of, what can we expect in 2026? What are the sort of things that might drive and move it? Well, once again, it comes back to the Fed outlook and those interest rates. Okay, if the Fed continues to cut rates, and if they were forced to cut them faster than others, well, that would naturally have an impact on weakening US dollar. Generally, whenever the central bank cuts interest rates, generally, as a rule of thumb, that looks to weaken the incumbent currency. But if market fears a return of inflation, well, that could strengthen US dollar. I think at the moment, people are probably more focused on Fed rate cuts rather than inflation. But once again, things can change, and the better the data, the more we are able to make a choice on that. Also, the dollar is still impacted by economic data. So jobs data, inflation data, any surprise in GDP. Most people were surprised at the kind of how strong US GDP was, overall for the end of last year. That can actually flip the sort of sentiment with regards to overall currencies, but in particular the US dollar. Hence why, once again, we've got jobs week, and so people will be keen this week to see, what the jobs numbers coming out of the US tell us about the state of the US economy. The kind of interesting thing is that whilst interest rates and the Fed outlook will have a major impact on the dollar, it is also a case of the kind of global risk sentiment comes into play. So in times of trouble, the dollar often strengthens as a safe haven, very often just due to its liquidity. Very often it's due to overseas institutional players looking to purchase US treasuries, which means they're looking to acquire US dollars to be able to do that. So, for example, at the start of this week, and we'll look at it in a little bit later, we saw the US dollar strengthen, on the open here this week, and a lot of that was a bit of safe haven flows after the events in Venezuela. Political and fiscal uncertainty that can inject volatility into FX pricing. As I said earlier, we live in the world of a Trump presidency, so there is always going to be uncertainty. There is always going to be injections of volatility, and part of that is about how we manage that and monitor it and keep on top of that. And one of the best ways to do that, and one of the instruments that you have available to you on ActivTrades platforms, is watching the US dollar index. So, for example, from my own experience, even though I like to focus on trading British pound sterling, my first port of call is always to look at the US dollar index. Okay, I use that as the bellwether, because I understand that if I have a good grasp on the dollar in terms of is it trending, is it consolidating, is it angry, is it quiet and calm, etc. That is a good starting point. Okay, and for those of you who joined me for previous sessions, you'll see that when we switch across to the live charts, it's normally the dollar index that I'll start with and chart certainly in the FX world, and then build out from there. And then, let's have a chat about commodities, okay? And in terms of, particular commodities that are of relevance and interest to, people who engage with US markets. So once again, okay, when we talk about commodities, of course, naturally, most people will focus on oil, but also they still have an impact for the metals and also the agricultural products, okay? And a wide range of them are available for you to trade through ActivTrades. Not unsurprisingly, okay, in terms of what's going to matter in 2026, it's that battle between rate cuts and inflation. Okay, if we see more rate cuts, okay, that can support precious metals, although they've not really needed much support, it might be said, over the last 6 months. But that will also have an impact upon oil, and very often you can see a correlation between the way the dollar, gold, and oil operate. And as I said, we'll look at that in particular when I do a session specifically on commodities. You will also look at, in terms of commodities, the sort of demand drivers. Not unsurprisingly, kind of growth in the US economy, overall industrial growth, and in particular energy demand. But also, of course, increasingly, people are looking at, what, if any, demand there is for EV adoption, right, and how that has an impact on metals. We have seen that in terms of the last couple of weeks. As I said, silver has been a very clear benefactor of momentum and energy, and of course, people are looking at the impact that has, and the impact that has differently between the sort of, let's say, the paper market, the electronic contracts, and actual physical silver, and the differences between that, and that just stokes up some of the volatility and momentum that we've seen, specifically in silver, but then also in gold and platinum and palladium, etc. Not unsurprisingly, when it comes to commodities, geopolitical and supply risk, we have been dealing with that for the last few years. I'd probably say ever since the sort of incidents, or rather the conflict in Ukraine and the Middle East, that has an impact on supply risk for all commodities. And if we see elements of that increase this year, that will have an impact. But also, if we see elements of that kind of geopolitical risk fade away, that also too will have an impact on commodities markets. And not unsurprisingly, as we've seen, gold and silver still remain safe haven flows, okay, for markets in times of stress and uncertainty. And this is the kind of thing that makes trading commodities interesting, is that, as it says, energies, metals, and agriculture, they can all behave quite differently depending on kind of global growth, seasonality, and also the inventory data. So, whilst lots of people like to look at trading oil and gold, it is important, if you're going to trade, a wider range of commodities, to make sure that you are aware of the kind of the individual nature of some of those commodities. And as I said, we'll look at that more in a future specific commodity session. Today, I just want us to, at the start of this year, I just want us to give us a bit of a big picture, broad consideration of what matters and some of the drivers that we need to be aware of as we go forward in what is going to be another interesting year. Sorry. So it'd be interesting to hear from those of you joining us and stuff. What do you make of that? Do you have any comments or any thoughts? Is there something that you think maybe I've missed, or something that concerns you with your own particular trading? As always, you're very welcome to put that in the chat box. Okay, it's always good to hear what other people's comments and thoughts are, and with regards to their own views on US markets in 2026. As I said, I think it's going to be quite an interesting year, ladies and gentlemen. So, just to sum that up before we look at US indices, if we look at core trading themes, we've kind of covered quite a few of them. They're pretty relevant, namely that those Fed rate setting expectations, that remains central. Okay, that just remains what everybody will be particularly focused on. All right, markets pricing in not just current rates, but the future guidance based on the key data, and also Mr. Powell's commentary and decision. And not unsurprisingly, a surprise can move all of those particular asset classes. Those big macro headlines of geopolitical events, like we've just seen over the weekend, okay, they can move markets fast, all right, and that can bring in that volatility in indices, FX, commodities. Hence why it is important to keep on top of the economic calendar, but it's also these days important to keep on top of the kind of good news flow on socials to understand any kind of snap changes. And whilst there are correlations, those correlations, they can break, okay? They can break, and they do break, or they change, okay? They adapt to changes in the world, changes in the markets, all right? And so, as it says there, they may not necessarily always behave in their traditional relationships. So, we have seen sometimes stocks and bonds fall together, and sometimes we've seen stocks and precious metals, climbing as they have done as well, okay? So, some of those standard correlations, they can break, or they can change and adapt based upon what we see going on in the world. And it really just keeps coming back to the same point, is that risk management is always essential, ladies and gentlemen. It doesn't matter whether you've been trading for 2 weeks or 2 decades, risk management is essential, right? Because all of that macro data, geopolitical shocks, and sector rotations, they can create fast moves, all right? They can create fast moves, and and invariably commentary from President Trump has the same impact. Hence why risk management is essential. And I know those of you who've joined these sessions on a regular basis will know that it's something that I'm always keen to stress every single week. So there we go. Some points and thoughts about trading US markets in 2026. But as I said, I want to focus primarily, just on US indices. Okay, that's what we're going to do for this session, and then in future sessions we'll look at FX, we'll look at commodities, right? But once again, for those of you who joined us in the past, I always talk about is if you're going to engage in any kind of markets, it's important to have the right pre-market routine. Think of it like an airline pilot with his checklist. Okay, it doesn't matter whether it's his first day in the job or his last day in the job after 30 years. He always follows a good checklist, okay, because it helps keep them safe. And that's the same for traders, right? Making sure you've got the right pre-market routine, schedule, and checklists to make sure that you are doing the right things. Okay, so what I talk about is, and I have a much more complex one, but just for a simple one that people can take away today, just having a simple trading plan, okay, just to start as a starting point. So make sure you identify significant levels of the monthly, weekly, and daily charts. People might say, well, what's the point in that, Paul? If I'm going to be trading short-term intraday, well, why would I need to know on a strong monthly level? And really, it's because of what I don't want to be doing. Is I don't want to be selling into support. I don't want to be buying into resistance. I want to know when those significant levels are, because by their very name, they are significant levels, and I want to use that to plan around them. What I'm looking for, as always, is I'm looking to sort of see price action triggers at significant levels. Okay, so it might be the big significant levels, or it might be things like previous days, previous weeks, previous sessions, highs and lows. Just remember, okay, at the start, if you're going to be trading those short-term intraday and you're using maybe a price action trigger, maybe enter the trade on the break of the candle, okay? Sometimes new traders, they get a little bit excitable. They get a little bit giddy when they see, an engulfing candle or a pin bar or, a double bottom, etc., and try to jump ahead of themselves. Wait till the candle completes. Wait till you get the break of that candle, and make sure that you have that stop loss at the other side of the candle. As always, the other side of risk management is, as I say, no more than 1% per capital per trade. It doesn't have to even be that much. It can be much smaller based upon your experience and your confidence levels. But generally, make sure that you're on top of that, and make sure that your trade has an asymmetric reward to risk ratio, namely that, it has, generate 1.5, 2, 3, 4 to 1, okay, or the next significant level. And then, as with all of these things, make sure you record, make sure you review, so you're in a position to sort of rinse and repeat that kind of routine day in, day out with your trading. So, as I said, just to build on that, always have some rules and expectations. Risk management is absolutely key. Make sure that you honor it. All right. If you're new to trading and you're still struggling to understand risk management, go on to the ActivTrades webinar archive on the website or the ActivTrades channel on YouTube. And you will find that there are lots of educational content on there about risk management, and please make sure that you're aware of that. Remember, know what news is coming out for that upcoming session, as we talked about. Have you conducted your analysis before trading? Okay, sit down and do it before you actually start to engage. Resist the temptation to trade out of session. Now, the interesting thing I've noticed over the last few years is that historically, what used to happen is that if you were an indices trader, what you would normally find is that for those of us here in, let's say, the UK and Europe, very often what you would find is that traders might trade European indices in the morning, so maybe the DAX and the FTSE, and then trade US indices in the afternoon. Increasing, and I'd say maybe about 4 or 5 years now, since the sort of kind of COVID lockdowns, actually what we have seen is an increase in the trading of US indices, sort of 24 hours. Okay, and they now have the kind of the size and liquidity to be able to do that. Nonetheless, the sort of the smartest time to trade them is generally in their major session. So, take that on board. As always, make sure you've got a good internet connection and make sure you're rested and prepared for a session. Intraday trading can be quite busy, quite volatile, and it's best that you're in a good place when you indulge in that. in terms of utilizing charts, okay, yep, we can utilize all of them, and what I also normally suggest is avoid the first 20 minutes of the US session. So that is, 9:30 Eastern time in the US, or which is normally about 2:30 UK time, so it'll be 3:30 Central European time. That first 20 minutes of the US session, I generally sort of say, sit and watch, but generally avoid it because it can normally be immensely volatile, okay? And you're best to sort of just sit and watch. And I also say the same normally for the last 20 minutes of the regular US session. That too can be quite volatile, and is generally sort of best avoided. You best sort of have had your trades on and done and gone by that. So those are just a few rules and expectations that just from years of experience that I share with you. So as I said, it used to be that you would quite often get traders trading European indices in the mornings and then US indices in the afternoon. So maybe trade DAX in the morning and then the Dow and the S&P or the Nasdaq in the afternoon. Increasingly, that's more done, and I too will do a little bit of US industry trading in let's say the European morning, okay, just because I have one or two setups that suits that. But what we'll focus on here mostly, as I said, is trading US indices during the US session, okay, just focusing on the main elements themselves, and that's what we're going to particularly focus on. And what you'll see I have across the charts, and you can be across all charts, across all of the charts available to you on ActivTrades platforms, okay, MT4, MT5, ActivTrader, TradingView, etc. You have the four major US indices, okay, the Dow 30, the S&P 500, the Nasdaq 100, and the Russell 2000, okay. So I have the Dow, I have Nasdaq, I have the Russell, and the S&P 500. Personally, for me, most of my trading is done on either the Dow or the Nasdaq. Okay, I will trade the S&P. Okay, if I get the right setup. I don't intraday trade the Russell very, very much. That's just a personal thing for me. But I like to have all four of the charts up like that because I believe a great deal in sort of trying to identify either correlations or utilize them in a kind of leading, lagging basis to help me with my analysis and to get an understanding of the sentiment of the market. So just when you see my chart set up, that's how you will see them. So you're able to understand those. So of course, if we're going to talk about trading indices, well, as always, we have to think of, well, what's our edge? What could we do that would that give us an edge in these particular markets? And what I've noticed is that with the increase of algo usage, indices are increasingly they're correlated. Okay, and so what I like to do is I like to use that increase in algos to our benefit. I don't see the point in fighting the algos. I think that's probably pretty foolish. Okay. Let's use the correlation to our advantage. And so that is what I started to see. So invariably, even just here on these charts, let me just pull this up here. You can see in this particular case, Dow's in an uptrend. It did have a little pop before it sort of slowed down. Same with the Nasdaq, okay. Same with the Russell. Same with the S&P, okay. So that just shows kind of the algo increase and how correlated they are. And as I said, I don't see the point in fighting that. It's more a case of how can I use that to give me an edge, to use that towards my own benefit. I'm also going to use kind of most of my existing tool set. So you'll see that I'm interested in previous highs and lows, so previous days highs and lows, previous weeks highs and lows, previous sessions highs and lows. And you'll see that on my charts. My charts are they're always quite simple. I've got a green 200 period, a red 50, a blue 20 period. I also have the kind of, as I said, previous days highs and lows on there. And I'm also intrigued in utilizing just simple things like double tops and bottoms. Okay, so big double bottom there, double top there, and in particular price action setups and combinations. Okay, that we've seen about and stuff. So how does price react at the kind of previous highs? How does price react to the previous lows, etc.? I'm always interested in how those markets react at the edge. Okay, that's what I'm keen at. And when I can start to see things like double tops and bottoms or price action combinations, so maybe engulfing candles, pin bars, inside bars, key reversals, okay, combinations of those at previous days highs and lows, that gives me a confluence of events. That's where I've got 2, 3, 4 things coming together at one time and place to give me an indication that there is a higher probability of price moving in one direction over another, and that's what I'm looking to utilize for my benefit. So let's just give you some examples here. So intraday trading those US indices. Okay, as I said, you know what, I'm kind of intrigued to see how do these markets all look at, and that's why one of the reasons why I particularly like to sort of utilize them and have them all set up. So Dow, Nasdaq, Russell, okay, S&P 500. In this case, we can see the price popped up and then it printed an inside bar, bearish pin bar before it dropped down. Did the same, okay, on the Nasdaq, okay, did the same on the Russell, did the same on the S&P 500, okay. In this case, the S&P 500, this was a resistance level I'd driven in. That was what the main drawing was, the price action combinations at that particular level of resistance. That's what works for me, okay. And then what we can see is that price dropped down and it bounced, okay, off that red 50 period moving average, and that's what it did that again, okay. So it's just that kind of correlation, and then we see there is a resistance level here for the Dow. I'm getting rejection candles, pin bars, and we fall away from that. And it does the same on the Nasdaq and on the Russell, okay, and on the S&P. And that's, as I said, why I like to particularly have all 4 of them. Even though I'm normally focused on Dow or Nasdaq in terms of most of my trading, that's why I have the 4 of them up there, because it gives me confirmation, or I'm getting confluence of events. I'm seeing it happening across that. Well, then, as I said, I know that's the algos in working. And so, as I said, I don't want to fight them. Why not just use them to help me sort of provide me with an edge and utilize that to sort of surf these markets. Just more examples of this. I've got quite a few examples of different sort of time frames, or just to basically to help us. Let me just this is just, as I said, I'm always looking at that correlation on these 4 major indices, and the 60-minute chart is always a good place to start, okay, to give you an overall view. What we can see here is that on the Dow, we basically popped up overnight in the Asian session, okay, done nothing before we drifted our way down. That's exactly what happened on the Nasdaq as well. We pushed away up, drifted our way down. Same on the Russell before coming back to that 50 period moving average, okay. And that's what we particularly look for. As I said, when I see them all moving in correlated moves like that makes me happy, okay, it gives me confidence, okay, it gives me the right that, once I've picked the right direction, well, then I'm in a happy place to sort of let that trade rage and run, because I can see that it is happening across all of the indices, across all of those particular moves. And the flip side of that, as I said, is I like to see where there are correlations, but equally, when I see correlations break down, that is telling me something as well. So in this particular case, okay, Dow, the Dow is kind of falling over, all right. The Nasdaq is rallying hard. The kind of Russell is kind of squeezing, and the S&P is kind of, not really doing much itself. So you can see there's a kind of a breakdown in those US indices based upon the charts we saw before, where there's kind of nice correlations between the 4 indices. When you see it breaking down like this is the sort of thing that generally tends to make me sort of, take a step back personally. When I see it like that, I generally tend to leave it be, because invariably I feel there's like a transition going, there's a change happening. And once again, why do I particularly want to fight that? I don't see any particular point. So, it can be part of your overall understanding, okay, your overall picture building. You want to see those indices all nicely moving together, okay, moving in a nice direction at a nice tempo. But equally, when you see charts like this where they're all over the place and they're all doing their own thing, that in itself is it's almost like it's like a red flag, okay, sort of just to proceed with caution. What I want to also show is that it's that we can see kind of is that even after big moves, okay, big moves, all right, coming here in the sort of the Dow and the Nasdaq and the S&P, kind of the standard standard pullback setups you've heard me talk about in previous sessions, okay? Pulling back to the 20-period moving average and then basically price action combinations, okay, at the 20-period moving average on the Dow, on the NASDAQ, okay, on the S&P 500, before price continues to drift lower there and towards the end of the session. That all provides kind of that sort of opportunity, okay? So, once a big move is made, there will be aggressive traders who will sort of trade the mean reversion back up, but then also there'll be lots of people who for whatever reason, weren't in this mood lower. There could be lots of different reasons for that. It doesn't mean you're a bad trader. It might have been news. It might have been Trump tweeted something, but actually as it pulls back and then you start to see once again kind of correlated setup, but kind of the pullback starts to sort of, exert its kind of the dominant trend exerts itself. That in itself is a trade setup. Right? That's something that you can work with. And just wanted to also sort of show how you can basically find one of them that is leading, one of them is in the, and then looking at the kind of price action opportunity. So in this particular case, it's the Russell. As I said, I don't really particularly trade the Russell much myself, but in this particular case, the Russell hit its resistance and put in a lovely double top there, okay, before it moved its way down. And actually, that was the nicest price action in that sense, because it did the same on the Dow before it moved down, did the same on the NASDAQ, did the same on the S&P 500. Okay, as I said, just when I've got the four of them all working together, even if I might look to focus more on trading Dow and NASDAQ, I am very happy when I see like correlated moves like that. When I see price action opportunities moving up there, okay, when I start to see all of that coming together, I'm very happy to sort of to follow that and work with that. That's as I said, I use the algos as your edge. Okay, don't fight them. Find a way to utilize them so you can ride the back of them. It's not about trying to sort of find the kind of the newest, smartest trading setup or signal, because that always happens. It is about what can I do that is repeatable, that gives me confidence, and that I have a confluence of events that I actually I can flow with the market rather than trying to fight it. And this is just kind of an example of what we can see is that actually, as we kind of come into the session, we start off and then we put in a kind of a low sloping double top on the Dow, but then we drift away. And at the same time, the S&P 500 actually puts in a sort of a triple top with a sort of final part being an engulfing candle, as does the NASDAQ put in that sort of triple top there. And it is about, you may have traded the kind of the strong move afterwards or the strong move at the opening, but equally sometimes, for various reasons that may not have happened or occurred. But, watching how do those markets react after that strong move, okay? Does it look like it's going to continue? Okay, in which case you can set yourself up to work with that. Or as in this case, you're getting triple tops, double tops, bearish price action that is giving an indication that that move is over and we're actually probably going to slide down for the last part of the second half of the US session. So there is always a way to engage with these markets. As I said, it is about just being a little bit patient and letting the market show you what it wants to do. Very often when people are trading intraday markets and they're trading US indices, because there can be a lot of volatility and a lot of movement, people get a little bit excitable, they get a little bit giddy, they get a little bit ahead of themselves, when in fact actually just letting the market play itself out, letting the market tell you what it wants to do can be the sort of beneficial way for you to operate. And just another a couple of examples here of how price action combinations, okay? Price action combinations, as in price comes into the market, okay? The market opens, and then what we see here is a price action combination. So it's kind of almost like a inverse head and shoulders, double bottom, pin bar, tagging the 200-period moving average, okay? At the same time that was doing that, before it rallied its way up, the NASDAQ had come down to the 50 before it rallied its way up. The S&P had come down and basically had put in a double bottom there with a bullish engulfing before it worked its way up. So, as I said, what you're looking there is, the Dow is in charge there, and you can identify that the Dow is in charge. Well, then either A, you can trade the Dow, or you can trade the laggards in terms of watching them in this particular example, because unlike maybe FX pairs, or your opinion, this is what as I said, I keep repeating, is that because the algos are in charge, when these moves, they do generally tend to be correlated moves, and that's what we're trying to take advantage of. We're looking to surf them, not to fight that market, just take the time to surf it. Yeah, there's quite a few examples there, but so a few final points, because I do want to sort of see if we can get quickly onto the markets themselves, is that as always, I like to leave you with a little bit of homework to take away, something you can work on from after our session. Go away and build a profile for US indices on your trading platforms, whether it be MT4, MT5, ActivTrader, TradingView, etc. Set it up as it has, and then look at how those markets react on an intraday basis. Okay, are they moving in unison? Are they correlated, or are they moving separately? Then look at, how does price react at previous highs and lows? Maybe it's the previous day's highs and lows, maybe it's the previous weeks, maybe even the previous months or the previous years. All of them are valid. And when you do see how price there, did it create an opportunity? Okay, did price move to those previous highs and lows and then reverse off them? And if it did it reverse in unison? Did it reverse with nice price action combinations, okay, in particular candlesticks, etc.? Because this, as I said, is all of that confluence of events of 2, 3, 4 things coming together at one time and place that can help you identify the possible move for yourself to take advantage of. Okay, ladies and gentlemen, let's just conclude. We've got a few minutes to go. It's great to say that Money Market Matters is going to be here to support you in 2026 in this eventful year. So I hope you'll join us every Monday, 2:00 London time. We'll cover news, education, active trades platforms, and the markets themselves. I said it last year that it's going to be an interesting year in markets, and I'm saying it again this year in 2026. It is going to be an interesting year in markets, and I hope that you'll join us to enjoy the journey. As I said right at the start, 2026 is likely to be another year of volatility in US markets. And ActivTrades provides a wide range of instruments across asset classes that you can engage with various US markets. In particular, what we looked at today is that intraday trading US indices, it's an exciting asset class. However, it is important to be thoroughly prepared, okay? So make sure you're aware of the upcoming news. What we've just shown and looked at, be aware, is there a strong correlation, okay? If there isn't, if they're all doing their own things, then perhaps maybe treat that as a red flag. Is one index in charge? Okay, is the one particularly clearly in charge? Well, you might wish to follow that for that particular session. And are there any particular static or dynamic levels of support and resistance in play? Make sure that you are aware of that. And regardless of how you trade US indices or anything else, always manage risk, ladies and gentlemen. Always make sure that is your number one element. Okay, before we switch across to the markets, just a reminder that, as I said, we'll be here next Monday, 12th of January, and next week's education element will be on how to trade 3-bar reversals. So a very simple little setup that you can take away and utilize. I hope you'll join us for that next Monday at 2:00, 12th of January. And as always, okay, if you aren't doing already, you can follow ActivTrades on YouTube, okay? You go onto YouTube, look for the ActivTrades channel. You'll find that lots of these sessions are on there. I appreciate that sometimes it helps to be able to watch some of the education pieces a few times just to help you understand and help the education click in. So you'll find that most of our sessions are on there. So by all means, make yourself aware of them. And if you've got any questions or comments or feedback, you can contact ActivTrades. Best is the email englishdesk@activetrades.com. If you've got any questions or comments, maybe you've got feedback, maybe there's topics you'd like me to cover in future sessions, by all means, feel free to drop that on an email there or put it in the chat box here. And we'll very happily take that on board and build that into future sessions. We want these sessions to be as helpful and as beneficial to you as possible. All right, ladies and gentlemen, so if you just bear with me for a moment, we've got a couple of minutes left. I'm just going to quickly switch across to the live markets, okay? So just bear with me for one moment and we'll bring up the charts. Okay, so just I'm just going to update my charts on this computer here. Let me just bring these in here. We can do that, have a quick look at how these are setting up for a session. VIX, let me just update the VIX on there. That'll become of interest in a moment. Oh. Okay, just always make sure if you're on the if you're using the kind of futures to make sure you've got always got the right most up-to-date chart in place. So that's what we've got here. So here we go, 3 o'clock. This is on a 30-minute chart, but I'm just going to go down here to the 15-minute chart. Yeah, and what we can see is that bang. What's of interest to us is quickly here at this moment is just hopefully what we can see is that let's just bring up the draw. So this candle here is it's the opening candle. Okay, there's the opening candle of that US market there. Then of course, as I said, at 3 o'clock we've got the PMI data, the manufacturing PMI data. All right, that's coming out there right now. But I think probably the big move that we have seen here already is and this is what I was saying. For the first normally 15-20 minutes, normally just avoid the start of the US indices, let it just to get its volatility out of the way. Of course, in that, when you look at that kind of one candle, everyone says, well, Paul, I could have just bought into that. But it always looks easier in hindsight, ladies and gentlemen. As I said, it's invariably a case of making sure you can manage that risk. Let's have a little look on the lower time frames. How's that going? Here we go. So just going down to the 5-minute chart here. What's interesting is that the kind of Dow has been leading high there, hasn't it? The sort of NASDAQ seems to be not correlated at all, does it? The S&P sort of kind of rolling over a little bit there, isn't it, as well? And the Russell had thrust up there. So I'd say there's a little bit of a breakdown there at the moment. Okay, we can see that we can see that basically the NASDAQ is trying to push lower, as is the S&P, where the Dow is kind of breaking higher, isn't it? I'm kind of intrigued here in that we've come to the previous week's high, and it looks like we're going to basically break, retest, and continue higher with that. So the Dow's in charge there, I'd say, in terms of that particular move. That's what I'd be watching at. As I said, I like to sort of watch and see in the Russells here. You can see the Russells following. So it's interesting, yeah. So I think we were just looking at a moment ago, NASDAQ and Russell looked like they were pushing, but actually it looks like they're following. So it looks like to me, as I'd be going into this session, that at the moment the Dow and the Russell, they are in charge and they're pushing to the highs, and then I'll be looking to see how does the NAS and do the S&P look to follow them with conviction. In which case it looks like for the moment, for this first moment, a little bit of a bullish move there. So that is the kind of sentiment I'd be taking into certainly the kind of next half an hour. If I'm intraday trading that and looking to see what kind of opportunity that could provide me. Okay, ladies and gentlemen, as they say, time flies when you're having fun. Unfortunately, we've run out of time for today, but I hope that you have found that session useful. I hope that's given you a little bit of insight into US markets and also into intraday US indices in particular. As always, I wish you the very best of success in your own trading endeavors. I hope you have a fantastic 2026. I hope that you will join us next week for the next Money Market Matters webinar, where we'll look at trading 3-bar reversals. Until then, have a fabulous trading week, everybody, and I'll speak to you soon. Take care.